Let's get to it. What's going on? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the forex market. This is another uh, morning episode of Trade with Travis, a live session that's actually happening right now. Looking for some opportunities. The market has crashed down about 400 points before we can be able to see anything before the 9:30 open. The market's about to open up in 2 minutes, so I'm going to go through my disclaimer, and then after that, take a look at some overall opportunities and be able to go from there. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Now, understand that forex trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So with that being said, what we end up doing is taking a look at trending markets only. Want to be able to see if we can find time frame alignment to go along with that, overbought and oversold stochastics that match up with that zone, and then after that, find a catalyst to be able to get inside of the market. But because the market is moving very fast, I want to go ahead and just open up and start talking about what we see. Yesterday, we end up having interest rate decisions. The interest rate end up getting brought up to 1.75. That's the highest that it's been since 1994. So that's something to be able to pay attention to for the overall movement. We got a minute before the market's actually done started out, but we end up having interest rate decisions from the pound. The interest rate decision from the pound actually ended up getting raised up to 1.25 compared to 1.0. And we look at initial jobless claims. Initial jobless claims is actually a little bit worse than what it was from the beginning. A little bit later on today, we're going to end up having the interest rate decision from the Japanese yen, so we have to pay attention to that as well. But that'll kind of give us an example about what's actually happening when it comes down to the market. Let's take a look at the big three real quick and see what's actually going on. And then after that, obviously, we're going to look at what's happening with all of the index pairs before they actually hopefully start making moves and everything else like that. Matter of fact, I'm going to take a look at the indexes first because if the market is going to end up moving, then I want to go ahead and at least be able to see what's actually happening before something ends up going from there. So I'm going to start off with NAS 100, and then after that I'm going to go to the US 30, and then after that we'll move forward from there. So here we go, NAS 100. Let's take a look at the chart. Man, it gapped down quick. Let's see. Okay, we talked about this before. We ended up saying that I believe that this market was going to end up falling down to I believe that the market still expected to fall down to 10,700 for the overall move. I'm going to jump into it based off the weekly. We talked about in our sessions for us being able to teach about how the market could basically use these gap areas to be able to push up and to be able to go down. Now, remember, we're definitely in a push zone where this market could potentially end up going all the way down to 10,770. That's the overall trade that I've been looking for being able to get in. That's from a weekly standpoint. From a daily standpoint, we've been looking at this market basically move. Yesterday, we ended up having a little bit of bullish activity. And ever since then, the market has basically ended up going all the way back up to that top move and basically it looks like tweezer tops, which is kind of weird. But that's what we're looking at for this overall move. We're basically in an R3 position, had a little bit of consolidation. We look at what's happened with volume profile. Obviously, we're still in that little gap of an area where we have low volume where this market can be able to move. The problem is that when we took a look at this earlier yesterday, the market ended up moving to a position to where it was, let's see, try to see if I can make this fast. So we end up scalping a buy yesterday when it came down to this overall area from this open gap area to this open gap area where we tried to get out right around 780. Wasn't able to get all the way up there, but the market gave us just enough to where we could be able to make profit off of it and be able to see the market move. Ever since then, the market ended up flushing down from that low volume area because once again, when you don't have that many people trading, you're going to see people start to sell the market from there, and the market will move pretty fast. That's what we talked about in our live stream yesterday for us being able to get that information. The market is still in an R3 position and it's expected to still fall down to 10,700 or 10,780. So ideally, what I would like to be able to do is that I would like to be able to see this market give us a 15-minute counter trend line break where we can be able to sell it when it comes down to that position, because the market has moved, because the market has failed pretty fast. So I do expect that it's going to end up pushing up. My only thing is this, because we had this little consolidation right here where we had resistance right here, resistance right there. It kind of blew through in this area and it kind of failed. If this market remains to be where like it is, we'll probably end up seeing basically um, we'll probably end up seeing a head and shoulders position to where this market could push back up to 494, and then after that start to break down to the downside. Now, I'm not saying that that will happen, but that is kind of showing. It is kind of showing some type of sense of that could formulate and could potentially happen. Now, I am still bearish, and I still think that the market will fall bearish. And we have a counter trend line break, and the market is showing signs that it may end up rejecting based off of this movement, because we are at support when the market could fall. As long as the market is going to remain to be under this counter trend line break, then I'm just going to end up saying, okay, well, I'm going to consider this market to be bearish. It's at 265 right now. Currently, right now, what I would end up saying is my thought process would be, if you can be able to get into a strong opportunity bearish, then that would be the opportunity that I'll be able to look for, because it's proven that now the market is going to end up continuing to be able to run. All right, so we have it. We have a strong move to the downside. We just got it from our trend meter and from our Don chain that the market is ready to go for being able to sell. Um, this will be a great area to go ahead and be able to make that move. I literally just punched in two trades at 11,270, 11,266. I got one in just right before. I got one in just right before the market started to be able to move. I'm going to show that now at 11,287, 11,275. So I am bearish on this overall move. I tried to get it a little bit quicker. I probably should have had the live stream go probably about 10 minutes before. But we do have a counter trend line break. Now, keep this in mind. We're leaving another low volume area. We're leaving the low volume area to an area to where we haven't seen that um, basically move before, and we're pushing down into the push zone. It would not surprise me one bit that this market it hits 10,770 today, which is the daily D extension. It would not surprise me one bit if the market does hit that position. If you're looking at catalysts and everything else like that, the interest rate is a little bit higher. The market's probably going to end up falling down. Who does that affect more? That typically affects technology stocks more. If the market does break this overall low of 11,213, then I think that the market could potentially end up flowing. Now, here's the problem: it is in an R3 position, but you can't because the way that the market ended up moving over the course of the last few hours, probably wouldn't be too. I probably wouldn't throw out so much of a lot size on this one. I probably wouldn't go too high, because if we would have caught it a few hours ago, then we would have been okay. But we could have got way more of a move. So I end up going with two micro lots on one. I have another. I have another one where I just went with three micro lots because it's a larger account. But I am selling on this one. We'll see how the market kind of moves off of this. I'm going to end up paying attention to it overall. If it starts to get away from me, let's say if it starts to get away from me after breaking this counter trend line break and keep on pushing to the upside, then after that, I just go ahead and just keep that in mind from going from there. My stop loss on this one, we see that the U-turn actually ended up happening above 391. That's a little bit too rich for my blood. I'm going to end up saying if the market ends up breaking above 325, I would be a little bit less interested in staying in the trade. If you want to be a little bit more conservative, you can say 367, depending on where you end up doing it. Matter of fact, that's where I will end up placing my stop losses at. It will end up being above 13,365. 13,365 is my stop loss. 13,365. I'm sorry, not 11,365. 11,365 will end up being my stop loss. Take profit will end up being the daily D extension of 10,780. So I'm saying that if this market remains to be below this overall counter trend line break, then I'm going to end up riding it out to the downside and try to get what I can when it comes down to that movement. My automation systems will not kick in on this trade. It actually ended up It actually ended up opening up on this trade early this morning, and I looked at it and I got out of it. So I feel kind of stupid when it comes down to that standpoint. But I basically got into the trade at the same position when my automation system got into the trade at today. I hate when that happens, but it is what it is. Um, I just gave away a little bit of a chunk of my account to be able to get back in the same spot, which is kind of weird, but sometimes that happens. So the risk on this trade will end up being, for me, about $282 going at the 1400. We can see that the market is rejecting from here, so it gives us the opportunity to be able to get in. I'm going to do. I need to change my. Need to make sure that my stop loss and take profit is set up for my other account, and from there we end up going. Dow Jones has already done made the move. It sucks. I wish I could have got to Dow Jones a little bit earlier. What's going on? Thanks for being able to pop in. I hope everything's going well with you. If there's a pair that you'd like to be able to take a look at, we can take a look at that. We can take a look at that real quick. I think we missed out on Dow Jones. Dow Jones has already done moves. It's already done moves 192 points already, literally in the first few minutes. But we will take a look at it. Maybe we might end up getting a little bit of a pop up. Doubt it, but we talked about this before as well. Daily D extension off of this move. Jeez, look at this market run. Daily D extensions at 24,475. The market ended up gapping. It ended up pushing up just slightly yesterday, and then after that, now we see a strong move to the downside. Take profit 2 is about to get hit at 29,885. If we look at what's happening from a volume profile perspective, we talked about this large, massive opening of a space that has not been hit yet when it comes down to that position. If it breaks below 30,000, in which it has already, then that means that we could see this market easily start to flush and go all the way down to at least 28,470 before really having much hesitation when it comes down to sellers. When I'm saying much hesitation, that means that a lot of consolidation or a lot of trading activity inside of that area. Doesn't necessarily mean that it's just going to fall and just going to and automatically get to that position. But it will spend less time in fighting with everybody else when it comes down to how far it could move. So that's why I'm saying 20,475 is the D extension. Let's take a look at it from a 2-hour perspective. Currently, from a 2-hour perspective, we have everything that's going in our situation to the good. We have a counter trend line break. The market ended up giving us a little bit of a high price. It ended up rejecting and pushing to the downside. So all I'm looking for off of a 15-minute is there a position to where I can be able to get in, or am I at a position to where I need to get in now, just lower my lot size and be able to place my stop loss above the overall high, which will be right around 30,360. If we end up doing that, the risk would be how much? 350 points. Yeah. Yeesh. Once again, it's in a push zone. We know that the market has a D extension that's way lower than this. If we end up getting into it in this position, I would not be necessarily obliged on being able to take a position on this one. I don't like necessarily the risk, but I can make a reason for being able to take it, even though I can definitely make a reason for being able to take it, even though I wish I would have got it 5 minutes ago. The market could move another 2,500 points before actually being able to complete a move or complete the D extension. So keep that in mind. I'm going to go with one micro lot, literally one micro lot, and see if this market pops back up. I'm going to go ahead and enter that now. I have in a trade at 29,029 and 29,024. Currently, the market's at 29.33. I am going to place my stop loss a little bit higher. Just because the market has moved a little bit, we're going to place it above this overall swing high, or just slightly above this overall swing high of the 15-minute. And then if it kind of gets away from me, I don't mind losing $300 off of this move. I wouldn't want to lose. I wouldn't want to lose my regular percentage off of this trade. So I'm going to place my stop loss above this overall swing high before the market ends up breaking this counter trend line break. Remember, when there's a breakout, typically there'll end up being a retest. So if you have not got in yet, I would almost say have one percentage to be able to get in now because you don't know if the market's going to end up moving, and then after that, wait for a 5 minute retracement and see if the market's going to end up giving you a little bit of a retracement of a move, so you can be able to get in, possibly maybe at the point of control if the market ends up making some type of movement like this and then pushing back to the downside. Um, but I'll limp in on this one and see what happens. Let's see. Or should I? I'm already in Nas. I'm already up on Nas. I'm not worried about that one. We'll come back to that one in a second. Um, okay, so this is what I'm doing. I typically don't do it this way, but I'm gonna try it out. Placing an entry right here. I'm gonna placing in the sale. I'm already in. I'm already down right now on this overall trade. Now, typically, I would not necessarily say, "Hey, get into a trade, let the market be able to go up against you, lose on one trade, or be down on one trade and try to be able to get in." But because we know that we're in a low volume area with insignificant pricing, then this may be only the best. This may be the best area that you could be able to get into while this market is actually flushing down. And I can actually be able to see that right now in the way that the market has moved currently. Currently, right now, I'm looking at it. I was down. Currently, right now, I'm up. I'm up $14 based off of this move. Um, but we'll see how it ends up working. If you're not in, I would almost recommend, um, especially if you don't want to risk 350 points based off of this. Um, you want to see this market kind of go up, give it a little bit of retracement, try to hit the backside of this overall area, and then after that, retrace down to the downside. That could possibly happen as well. Um, or the market could just potentially move because we are in a low pocket area. The reason why I'm in the trade is because of the low pocket area. Currently, we can see that this market has already made a big move to the downside. Wouldn't surprise me that it may end up retracing just a little bit, but ultimately, I think that the market is bearish. Um, so let me place my stop loss real quick, and we'll go from there. Is there any trades? Is there any pairs that people are interested in at this particular point? I want to make sure that I end up answering those questions as well. Okay. He goes to slight retest of this move. If this happens, what I'm going to end up doing is, let's see, I may get better value if I wait to be able to see if this market will pop up and then kind of go from there. That means that I would take an initial loss on this first initial trade and then wait for the market to be able to U-turn and be able to give me a little bit of retracement if that does happen. I'm going to wait until the end of this candlestick to kind of get a little bit more confirmation on if I should do that. Um, but that would be the thought process of being able to wait just a little bit. And that's the reason why I said I would limp into this trade. I would not jump in all the way because the market has moved pre-market before this. Wouldn't surprise me if this happens. Market ends up pushing up, retracing to basically what its market actually end up happening, what a point of control actually is, and then after that rejecting back to the downside. That would not surprise me one bit. Um, I would pay attention to that for the overall move. I'm going to get off of this one and take a look at something else real quick. Let's get off of this and take a look at something else. We're already in it. Hold on, I didn't say anything about the stop loss. Okay, so they go to push back up. Should I eat this first trade? Should I eat this first trade? I'm gonna eat this first trade. All right, so took a loss of $100 on that move. I'm gonna wait and see if this market can get up to point of control, and if it does reject off of point of control, then I take it from there. Okay, so took first loss on Dow Jones on that one. Probably shouldn't have chased that one, but I'm going to wait for this market to be able to go back up to the point of control. If it does give me a little bit of hesitation up there, then I'll look at being able to get in. Until then, I'm going to stay away from this one. Um, We already looked at Nas 100. Just looked at US 30. Um, let's see. Let's take a look at German 40 real quick. German 40, my automation system caught some sales when the market had a little bit of a consolidation to the downside a little bit earlier. Ever since then, it has not gotten in. Um, let's do quick top down analysis. Weekly, market broke counter trend line break of the inner and outer trend line, had a little bit of gap to the downside. The market is basically flowing to the downside. There's an expectation that this market could fall all the way down to 10,010 or 10,100 to the downside for the weekly move. Doesn't necessarily mean that it's going to happen now, but overall, there could be an opportunity of that happening. From a daily perspective, we can see that the market is bearish. We had that slight retest of a move yesterday, and we have the strong movement to the downside today. So we have both of them showing us time frame alignment for us to be able to move for it to movement to the downside. We look at volume profile, we can end up seeing that we're moving more to the point of control, which will end up being basically right at 12,305 based off of all of this previous consolidation that ended up happening in this area. So that would be my thought process of where my take profit one should be. And then ultimately, we're going to end up trading to get to this point. But you probably wouldn't be able to trade to this point and feel very comfortable until it breaks below this low volume node. I mean, this high volume node right here at 11,400. And then after that, push to the downside from there. So we are looking for selling opportunities. From a 2 hour perspective, let's take a look at what's happening from a 2 hour perspective. Counter trend line break has already happened. This market, I guarantee you, look at a stochastic is oversold. From a 15-minute, it's overbought. Go figure. But that is the counter trend line break that ended up happening right here. How about can't make this stuff up, man. Really can't. High volume node broke from that high volume node, flushed down very quickly this morning. Currently, right now, market's in a 15-minute sell zone, given an opportunity to possibly be able to get in, but the 2 hours in a buy zone. That means 1 hour is definitely in the buy zone. I don't know. Risk versus reward is going to end up being off. For scalpers, this may be one of those things to where you might want to go after maybe 20 or 30 points and possibly be able to get it. In which I don't. It wouldn't surprise me if you would, or if you would be able to get points off of that. The question is, from an equity management standpoint, is this still a safe trade to be able to get into? That's the only question that I have overall. Remember, if we do this, take profit will end up being basically at the B at this point, 12,462, which is about at this point almost about 600 points away. This is not the greatest move in the world, or not the greatest opportunity in the world, but it is a scalping opportunity. I'm gonna put this is being very greedy. Okay. Stop loss. If you place your stop loss just above 13,150. You place it above 13,150, that means that you end up having a 100 point risk compared to going after take profit that's down here below. That's 1 to 6 when it comes down to the risk reward ratio. Um, Same deal. I don't mind taking the trade um, because once again we're going from a high volume node. From a low volume node to even a little bit more of a push down to what its take profit is going to end up being. We're already in the R3. We already know that the weekly's to the downside. I wish that the only problem is that I wish that I would have seen this a little bit earlier, earlier this morning. Um, my automation systems did, but my automation systems have already took me out of those trades this morning. So I am in the green, but the thing is, just want to be able to do what's best for y'all. Um, if you do take this position, I think that this could be a good scalpable position. Um, Stop loss will be above 13,150. That means that your entry end up being right at 1345, somewhere around there. Take profit will end up being the B of this move or the B of this Fibonacci, which will end up being at 12,004, 12,470. 12,470. Um, there we go. I go ahead and go with that. Low risk, high reward. Um, 13,150. Take profit, 12,470, which is a B, which is also the, take a look at it from a daily perspective. Getting closer to the point of control. We said the point of control is at 12,305, which basically be all that area. It wouldn't surprise me if the market gravitates and keeps on going all the way down to that point. I would like to be able to get out before that actually happens. So my trade is to be able to go down here to the B area first, get out, and then after that, see if the market gives us a little bit of a retracement and see if it breaks below this point of control. Then after that, I'll place in the second entry, and that second entry should be faster than the first one. But once again, very light with the entry off of that, very light with how much I'm risking based off of that as well. We'll get off of that. All right, so I'm in on Nas. Took a look. Took a see in on Nas. In on Nas. In on German 30. Um, US 30. I said I wanted to wait to see if I can be able to get a little bit of a higher price. So I am going to wait to be able to see if I can get that. Um, Currently, right now, that is it. Yeah, currently, right now, that is it for its overall pairs that I'm potentially in, um, and trying to see how this market's going to end up rolling. If there's any questions or anything else like that, any pairs that y'all would like to take a look at, y'all can place those inside of the comment section real quick. We'll go ahead and talk about that. I know this one's a little bit faster. Typically, what we end up doing is kind of giving backstories and everything else like that, but it's kind of hard to be able to do that when you're in a live session and actually trading at the same time. Um, currently, right now, in currently right now, Nas up $323. Um, DAX is up $5 based off of that movement. We just got into that. And we'll try to see what's happening with US 30. Let me come back to US 30 real quick before we get out of here. US 30. Gonna go back to the 5 minute on this one. Okay, so once again, game plan for US 30 is very simple. One, I am expecting for the market to be able to push back up ever so slightly. We just took a quick little loss off of it. The market has made more of a morning star. It just retested that candlestick, and I do expect for the market to be able to go up. As long as the market ends up staying right around the point of control of 30,100, and starts to reject, and after that, I will look at being able to sell it around that area, and then from there, we'll see if we can get a counter trend line break and be able to move. So that's a breakout. That will be a retest. If it passes the retest, then the market will fall. If it rejects the retest, then the market will push up, and then that means I won't get into the trade, and we'll stay away from it. Type in a Y, yes, if that makes sense from this overall movement. Remember, the market before we end up getting into the U.S. session, doing a London session, ended up having a strong drop. So you did not get into those positions before then it's not necessarily the greatest time to be able to get in on most of them. So I would stay away when it comes down to that. Now, typically, when you end up noticing that one indice moves, the other indices can end up moving with it. So it wouldn't surprise me that I might have to take a little bit of a quick take profit on Nas or something like that to be able to protect profits and try to see if I can be able to get in a lower price. But I think that my stop loss is okay when it comes down to most of these pairs because it is kind of high enough. The only one that I would consider to be a little bit too low will probably end up being DAX. But once again, like we talked about with DAX, that's a limp in trade. And then after that, see if we can get in from there. Uh, today was brief. That is a quick 30 minutes. I thought we're going to be able to get through a whole bunch of different pairs, but we got through the big three that are moving right now at this particular point. You like what we end up doing? Click on that like button. Make sure that you end up tapping in the quartercowcapital.com/start here. And from there, everybody have a good day trading. Moves have already happened this morning, so I wouldn't be surprised. I wouldn't be surprised that if this market kind of slows down a little bit. There's no economic news today. We're just coming back from seeing that the interest rates are changing. So we could see that the market could continue to be able to fall a little bit later on today with low trading volume. Like always, plan your trade your plan. Everybody, take it easy.